Hi, it's Dave again at TitleSearch.com. For our clients at the credit unions that we do title searches for, I want to give you some ideas of why a title search is a valuable service and product when you're underwriting loans from your credit union, either real estate secured or even unsecured loans to a member of your credit union who has real estate. First of all, it's likely that you may not have the same connection to support of an institutional title network like a bank might. A financial institution may own a title company or may own a lending company that does mortgages on a regular basis and have that access. So getting a good independent third-party title search from a certified title agency is going to help protect you from some of these risks. And the first one is to make sure that the lien position of your loan is going to be in the right place. You want to make sure that the client that you're looking to lend to actually owns the property. Your borrower owns that property and is correctly vested, and that they own it by themselves. If they have another party on title, that party may need to get involved with authorizing that lien to be put on the property. And you also want to check for other liens. There may be liens and judgments that are not on the credit report. You pull a good credit report from a credit bureau on your borrower, there may be some types of liens that don't show on a credit report that are on the property. That'll give you an idea of what your lien position is going to be. Municipal liens may jump in front of your mortgage even if you record it before that lien. The other part is going to be, are the taxes paid? Are this person up to date on their property taxes? That won't show on a credit report if they're late on their taxes, unless it becomes a tax lien, which may take 2 or 3 years of delinquency. You also want to look at that property for recent transfers. The property's been flipped back and forth a lot of times in the last year or two, especially if it's the same person flipping it back and forth. It may affect the value. It may show that there's some instance of trying to manipulate ownership or assets, maybe to get more lending or more loans than they normally would qualify for. You also want to look at valuation. A title search will probably have comparable sales to see what that property might be worth. You may do an appraisal yourself, but the property comps will give you an idea of the value and if you're going to have equity for that credit union lending structured instrument that you're going to put on the property. Also, to see if that property has prior foreclosures or tax liens. That'll make sure you have good title. There's not going to be any clouds that'll pop up later that will maybe interfere with your right of collateral on the property. Remember, you're a member-owned institution. Keeping costs down is important. Part of keeping costs down is getting good prices from your vendors on title searches and due diligence, but also making sure that your risks and liability are mitigated so you don't have things that pop up that take away the profit on the loans.